Hello, everyone, and welcome to Average Traders. We live in a mad world. We thought it wasn't possible, but we've got even more uncertainty with the market crashing as global crypto markets plunged under a $1 trillion market cap. Upon the heels of Terra Luna collapsing, and today we saw a brief depegging of Tether, which fortunately did recover. And also, the main story, one of the largest crypto lenders, Celcius, which was giving users yields of up to 17%, stopped allowing withdrawals, causing panic, and even Binance pausing withdrawals of BTC. What is going on, Rajan?
Well, it's like you just said, every week it seems like we can't have a week where we just go, oh well, this week was a bit dull, not much going on, and it's bananas. I mean, we're having a sell-off of all proportions from every asset class, being led by crypto. Crypto is the one that's really leading us lower. But we've got the Nasdaq down right now, 3.7%. The S&P is down over 3%. We had big sell-off in Asia because of more COVID restrictions. Apparently, in China, they have now halted all sports activities on the back of a COVID rise, and so China's policy ain't helping things. But just that oil keeps on rearing its head, and energy is just being a bane in this market because we can't get oil to sell off. Today we actually had crude oil, CL basically went to 117, straight away bounced back up to 121, 122. So oil was not coming down. You would hope when we're crashing or the market's going down, oil can be brought down with it, but no, it just. And so those gas prices are going to maintain its level. But in terms of the crypto, the big news today is Celcius. And as Jason just mentioned, Celcius is one of the biggest crypto lenders. And so what happened with Celcius, basically? Well, looking at their website right now, they have announced that they are pausing all withdrawals, swaps, and transfers between accounts to basically put them into a better position to honor over time its withdrawal obligations. Now, with Celcius, their whole motto, they did go a bit aggressive, like they take in Bitcoin, Ethereum as collateral and then lend out to people who want to borrow. And a lot of what they lent out is stable coins. So what happens, I believe at one point, they had around $12 billion in collateralization, and they were lending out around $8 billion worth of stable coins and other coins. And Terra has basically been the unwind, it's the start of this massive just cascading effect in so many of these crypto projects which have been hit really badly. Avalanche is another one that's been creamed. They've had a big exposure to Terra. And I believe that Celcius also had quite a lot invested in the Anchor protocol, which obviously was the Terra UST, which collapsed, and they have been badly affected by that, and the overall crypto market, which has dropped as well. So the thing is that from having $12 billion of collateralization and lending out $8 billion, this massive crypto decline being led by the Luna collapse, which happened a few weeks back, has now put their liabilities above their collateral. So the thing is that I don't exactly know at this current moment what the collateral level is. It's about maybe 7.5 billion, but they've lent out 8. So obviously they're in arrears. And the thing is that, what they're doing right now, rightly or wrongly, is protecting their own bacon. Now, I was watching a few other podcasts in regards to this, and it's a true point, is that if the UST, the Terra protocol, stopped withdrawals, they could have maybe avoided this massive run on the crypto, which might have maybe not given Terra a bit of a chance. So Celcius, in this case, they have just stopped it. They've got an imbalance, so they're trying to obviously sort out their position, sort out their book, maybe calling collateral from crypto that they've lent out to try to balance their books and to try to make their deposits whole. Because at the current moment, if these deposits these withdrawals keep on happening, their collateral is going to keep on shrinking and shrinking and shrinking. Yet they've got $8 billion in liabilities, and so that's going to be a real problem and just lead to another big collapse. And we could get a collapse, although not on the size, but close to the level of what we just saw in Terra. So the thing is, we see what they say here: acting in their interest of the community is our top priority, and they want to adhere to their risk management framework. They've activated a clause in their terms of use that will allow for the process to take place. Celsius is valuable assets and are working to diligently meet their obligations. So rightly or wrongly, I guess they're doing this defensive mechanism. We saw it with Robinhood when you saw the whole GameStop thing, and they stopped buying of options and buying GameStop, and you could sell only, and that sort of just it basically took the stuffing out the rise of AMC, GameStop, and all of these meme coins. And just the way Robinhood did it, it's happening a bit over here too. And so Robinhood is still in the game, although their share price ain't that great. But the thing is, maybe this is the best thing they could do to although a lot of customers are really pissed off right now that they can't access their money, but in a way for the wider good of the system, it's basically what's happening. But because of this, we're seeing crypto sell off like crazy. Today is down 14%. And the market cap is just over $1 trillion, but it did dip just below $1 trillion. We've got Bitcoin down 16% today and down 21% over the last week. Ethereum is down over 31% in the last week. And, Binance is down 24. Like basically every project is just down 20, 30, 40%. So it's just not pretty right now. And then, and this is filtering through.
Also have the SEC. Yeah, we have the SEC
on their
opening
backs.
up 2 new investigations on Celcius and MicroStrategy. So
we've got MicroStrategy now. We're getting all these crypto names that have been smashed. So MicroStrategy, last time I checked, was just above 150. Got Coinbase dipped below $50 again. It actually went to a low, I think, of around 46, 47 this morning. Mara, all the crypto names are just getting absolutely cream crackered. And it's just not pretty right now. We actually got the Coinbase currently, right, it has rebounded off the low of 51.30. Having been a low of 46.18 is where it opened up. So the thing is that there is some opportunity in it, and I think Bitcoin's obviously getting the brunt of this right now. But it's not be pretty. I mean, even Tesla, they're now underwater on their crypto, even though it's a few $100 million. But they had 1.5-2 billion, and so although this is weeding out, this whole crypto sell-off is weeding out a lot of these crappy projects, it's also really MicroStrategy, a lot of these other actual legitimate companies that are going to feel a bit of the pinch. Square is down around 40, 50, 60 million from its crypto investment. So there's a lot of, we've seen Square getting absolutely hosed as well. So it's been a bit of a rough one.
So the question on your mind must be, why is everything crashing? When is it going to recover? So we had a CPI reading of 8.6%, which means inflation is running super high. And we're looking at the Fed to answers, and it looks like they are likely to raise rates much higher than previously expected. Previously we're looking at 0.5% interest rate hikes, but it looks like the Fed is behind the curve, and to get a handle on inflation, they'll need to raise it 0.75 in multiple increases, or even 1% or even higher. They might potentially, the market is scared that the way to just get a hold of it is to do what Paul Volcker did a couple of decades ago and basically just jack up rates to 20% to really put a lid on everything. And if this is the case, I'll just say, as soon as you hear it, just sell everything. It's going to be.
I tell you what, what it is. They're so behind the curve, and they got two choices. The thing is that unemployment right now is at a low rate, so they have the license. They've got a good, one of their mandates is high, good employment rate, and with the rate currently at what it is, they have the freedom to do what is necessary to beat down inflation. And if that means manufacture a recession, I think that's what they can do it, because realistically, that might be the only way you can tame this inflation figure, which is running way too high for the world's reserve currency. It's the United States dollar, and we're running at 8.6%, which is the third or fourth reading above 8%. I mean, this is sustained above 8%. This ain't a one-off reading. It's sustained. And when you look at the numbers on Friday, I mean, it was a broad-based inflation across the board. And, you look at these bonds, it's just wild. I mean, the 1-year US Treasury is up 29 basis points, trading at 2.8%. The 2-year is trading up 21 basis points. The 10-year is trading at 3.345%. It's incredibly large moves out of the Treasury. And the thing is, despite the threat of a 75 basis point hike or a 1% hike, oil is just doing nothing. Oil, it just cannot go down. And so I've mentioned this to you before. I feel like the only way you can solve this is try to broker a deal with Russia and Ukraine, because that is the only way because energy is a huge proponent of this CPI increase. I think it was 107% increase in fuel price year on year. So the thing is that Russia, I was looking at this today, they're 11% of the world's landmass, 11%, and the next highest is Canada, which is like 6.7%. So basically 1 in 9 square foot in the world of landmass is Russia. So it's just too hard to exclude all of everything that comes out of that country. And so, and given that Europe has literally sold their souls to Russia, the amount of energy dependency Germany has on Russia, it's not solvable in any other way other than to somehow call a truce. And I don't know if they are willing to do that. And if that's the case, I mean, we're going to just have elevated prices for a long time to come. I mean, what say you?
So, I mean, if anyone's wondering why, the treasury yields really matter so much to the market, it's because that is the risk-free rate, meaning you can purchase these treasuries and you're guaranteed that particular rate for the duration of the yield, whether it be 2 years, 10 years, etc. So this means that all other equities or anything else that you want to pretty much buy has to return a higher yield than, say, 3.3% for the 10-year, which basically makes everything else less appetizing for investors. Therefore, you see a whole bunch of stocks, etc., just go down in price. And when we're looking at the wild swings that we're seeing, it's the big money moving things around. We've seen, over the last couple of months, retail still buying the dip, but at the end of the day, the retail is a small percentage of the market. The big pension funds and the big boys in the market kind of just push things around. And Rajan, as we were discussing yesterday, this type of sell-off, you would prefer to have a violent sell-off where everything dropped like in 2020. Yeah, and it just looks like this is a very planned kind of exit. This much of assets needs to be sold every day. So we're looking at uncertain times ahead because there's no end in sight for this.
Yeah, fortunately. So, I mean, you're looking at right now, I'm looking at the NASDAQ and it's just been hovering around this 450, 400 range lower. And it's just so orderly. Like we had a little brief attempt for a rally and it's just slowly come back down. But it's just mental. And the thing is that it really doesn't seem like there's any buyers right now to pick this up and push this higher at the moment. And this is the third large day of selling. It's a very it's just a very tough time right now. And let's just have a quick look at that, old trusty chart. And again, haven't changed any lines, same as what we talked before, but it's still playing beautifully with these defined regions. And I think when we had the last pod, we talked about how we had 4 pin bars and then we had this bounce and then we sort of consolidated. And what I was hoping, and I think what we all did, that we can sort of breach this lower trend line and maybe break out of this range, but we didn't quite reach it. And look at that, we've had 3 large bars to the downside. Now, the real fear is that unless this week, this bar, we can sort of basically make up most of it like we have in these last 4 occasions. But if we maintain this really thick red bar like we have now, I mean, that could be the real catalyst to break through this level. And then, if we do that, I mean, where do we go next? I mean, we could go all the way down to 3,500 is probably the first level, followed by 3,250. So those are the 2 next points that we could reach should we break this lower trend line, which is over here, which really, I mean, you could see how big that those sell bars are. So, I mean, there's no buyers in any of them, so it doesn't look great. And I mean, it looks like more pain ahead, but hopefully that's the contrarian indicator to signal a reversal of some kind. But yeah, and that's until we can get crude down. I mean, and energy is the largest component of, I mean, that's really driving this inflation. And that in turn is having so many knock-on effects like airline prices, which was a huge increase in airline fares and all the related things. It's all related somehow or another to energy. And unless we can get these energy costs, and to be honest, the cost ain't even that bad. It's just the futures prices. Like the cost of getting your oil hasn't gone up the same proportion as the futures have gone up. So this is really what it's just a speculation, just the driving higher futures prices. I feel like that's the only contract you can make money on right now. It's actually, you can buy it and actually make some cash, because buying these dips really ain't working. It's really not working. So yeah. I mean, what you've been looking to trade, or what you've been looking to trade during this? I mean, it's hard to really trade much.
Yeah, definitely. Just looking at what what kind of spread trades you could do. Just go long Tesla and short, Coinbase or Amazon. It's just like I see how that could work. I mean, we've said this before, but Chamath predicted all of this in November last year, and if only we were clever enough to listen to him then.
I mean, you look at the sentiment just in general. All these guys on Twitter, we've been talking about this before. The ones giving all the advice, or diamond hands, a hold to the moon. This crypto is going to go to the moon. This is going to go to the moon. I mean, it's all starting to peter down, especially on my feed. I don't see it as much, compared to what I used to see it before. It's all just, it's all changing.
Where's Michael Saylor right now?
Yeah, where's Michael Saylor? You know what? Everyone was bashing Charlie Munger as being that old, worn out 99-year-old man or whatever, but he had a point. It's like, he went. you weren't having it, and
Yeah.
maybe.
And this is where you see the men from the boys. There's a whole bunch of us that were saying that Bitcoin acquisition from Tesla, when it hit around 60 odd K or something like that, they should try to take some off the table. But a lot of people got mad.
Oh, that's the problem.
People saying that, and yeah, they're like, no, you can't. And then there was one point that Elon's words were just so important that they were moving the market, and everyone's mad at Elon for that. It's just nuts. And obviously now, I think when Bitcoin reached, I think 24, 23, that in this Q2 earnings, Tesla's going to have to take a $200 million impairment charge. And if it gets to 21 or so, then it's going to have to take another $200 million impairment. So we're going to see a lot of these Q2 earnings from a lot of these stocks, especially Tesla, aren't going to be great, which could further send downward pressure on these stocks. So
if you look at everything that's happened, everything's a man-made problem, right? This whole Russia problem is a man-made. It's just these guys can't sort this shit out, right? That's a problem. In terms of all the stimulus that was given out, all the the Fed overstaying, just going too easy for too long. Fed problem. The government, doing stimulus not doing targeted enough stimulus. That was a government problem. Everything, I feel like it was just bad management. The lunar collapse, that's again a crypto, it was a man-made problem. It was, there was chinks in the armor of that algorithm. It wasn't really proof to, it basically couldn't stand the weather of just huge amounts of withdrawals and attack of that project. So again, that's another problem. So all of this has been created by just bad management and bad execution of a plan. And this is it. So the thing is that generally what the people do, they blame the president, they blame Biden, they blame this, they blame that. And, they all have their bits to blame. But I think every entity along the way has been at fault for some reason or another, so.
Yeah, and even with these crypto withdrawal pauses, you see the whole business model was based on new money coming in to kind of fund the interest rates for existing users. So essentially, it was a kind of Ponzi scheme. And then even if you look at, like we were just talking about before, Michael Saylor, I remember him, encouraging just novice investors to liquidate all their assets and buy Bitcoin on leverage. I saw a tweet about that, and I remember
the top was when Tom Brady went laser eyes, and then when Tom Brady did it, I remember he did it right at the top, 160,000. And since then, the amount of celebrities that came in with laser eyes, and then .Shaq.eth, Shaq.sol, and then when do celebrities become like the arbiter of good financial advice? These are all just part of the issues, The
thing is, it goes through cycles. It was the same in 2000 with the crash. Everyone was just throwing money at any .com stock. But, and then for the last couple of years, it's just been throwing money at everything, even in terms of VC. There were, companies that were just raising $10 million just by doing a 30-minute Zoom call, and the money would just get wired straight into their account. Now, they have to spend like a couple of weeks just getting that now, which seems like it's going back to what is normal. David Sachs was going on about that. But it's just going absolutely crazy. There was just too much money. And it seems like the recession that was going to be coming in 2020 was just now going to hit us pretty hard, it seems.
It is stagflation right now. We clearly seen, we've seen more headlines about job losses. We spoke about it in the last pod, but we've seen a bit more continual press releases about hiring freezes or job losses. And so the thing is, you can now see that it is going to affect demand in a way. I actually saw like a snippet, although I didn't read into it, that Intel notebook sales for May was well below forecast. So, you're just seeing these sales of notebooks being hit, and that's just the start. So, it'll be interesting again, always see how it all pans out. But as of now, we're in a rising rate environment, and that's just not favorable to stocks. So in terms of stock moves, it's not good. But the thing is, so hard to time a bottom. Really is no time to, so again, my strategy always has been stay small and, just keep on snipping away, take profits. Yeah, that's what it is. So there's only two things that I feel like, for me personally, I find it really difficult to short something that is already down 70%, and maybe that is the way to go. But the thing is that I feel much more comfortable buying it, and just if it's at a decent level. But at the same time, XOP, I've just been shorting that all the way up. XLE, I actually took profits on that today. I shorted XLE when it was around 91, 92, and actually went to around 82 today. So I just took the profits on that. But if XLE goes back towards the 90s again, I'm going to be looking to short, because you've seen this energy sector on this, as you see, continuing to go up. But I feel like any positive surprise. So, for example, Saudi Arabian Corporation with the US, and they increased their oil, increased their production, or maybe, even though there's a very slim chance, maybe some type of agreement between Ukraine and Russia. And I just feel like the shocks are to the downside, not to the upside. I feel like so much of it has already been priced in. And so I'd rather be short energy, but with some defined strategies. Like, I'm not going naked to the upside, because you never know. Oil actually did get to 147, I remember last time. And we're at around 120, 121 now. So technically we still can go up another 20% easily. But if we do go up 20%, well, one thing I remember last time is when we were at 147, I felt like the fuel prices weren't the prices they were now. I saw that the average cost of filling a tank in the UK is over £100 now. I filled up just the other day and it was $65. It's $5 a gallon pretty much everywhere on the east, and then on the west you're looking at $7.50. So that EV can't come fast enough if you can get one. So it's just, yeah. I mean, it's crazy. And I've seen a Nasdaq right now. It's again trading, going back towards the session lows. It just can't do nothing. It's almost down 4% on the day. I mean, you look at some of the moves right now. We're seeing Affirm down another 13%, Apple's down 3%, Tesla's down almost 7%, SoFi's down 8%, MicroStrategy is down 27%, 148. And the amount of money he took out, issuance, and then just done so many stock offerings to buy Bitcoin, convertible stock offerings. And I mean, this is what happens. When you get this pump environment like we've been getting, this is just the inevitable outcome. But it's always good to say in hindsight, but at the time, it's very difficult to go against the grain, as we're doing right now. Going against the grain right now is super difficult, just the same way it was super difficult to maybe sell up that when everybody was getting angry at you. Remember when Meet Kevin said, I'm selling everything, the amount of abuse he was getting. I feel like anyone that sold Bitcoin, anyone that did anything like that, the amount of abuse they got if they publicized what they're going to do. But right now they're all wishing they did the same thing.
So there's only one thing that can save the market right now, and that is the McRib. Because as you can see from this very fancy chart, when the McRib is in circulation, the market does better. So come on, it's not just Russia and Ukraine brokering a peace deal. We need McDonald's to step up too. What'd you say?
I mean, this makes perfect sense, and it makes as much sense as everything else right now. So, it's valid analysis, in my opinion. Totally valid analysis. But on that bombshell and free piece of information that you could take to help you with your trading, let's just see if we could get a bit of... let's just see what happens by next week. Hopefully we can hopefully this bottom trend line that we talked around in our chart can hold. But if we do break below that and close above that meaningfully for a couple of days, then it doesn't look good ahead, and it's going to be a very tough one going forward. The real question is, how long will it last? Are we going to be we've been technically going down since November, so this is about the 7th, 8th month since we've come off from the peak. So is it going to last a year? It's going to last to the end of the year. And again, I think as soon as we see signs that inflation is starting to peter out, and we can easily see that if oil gives it up a little bit eventually, then the market will turn. Because once inflation starts to subside a bit, the Fed will not have to be as aggressive. I think everyone can calm down a bit, and then that will be the turning point for the market. But and to see that, all you've got to do is look at energy prices. So that is just number one thing. You don't even have to wait. Keep an eye on that. You don't even have to wait for the Fed to say anything. Like, you see energy, if you see crude sustaining below $100 a barrel again, I mean, that will be a start. And we need a 20% move, and it can easily happen if we get the right data the right catalyst to sort of help that happen. But right now, again, remember, this crude price is just futures traders, speculators, this and that. They're the ones that are running things right now. So although all this news is out there, I mean, someone just sells a boatload of crude futures and we're back below 100.
Yeah, and look, you have to just look at 2020 lockdown period when the same futures traders caused oil to go negative $31, right? So it's all a speculator's game. So yeah, I think that's really great advice, Raj. And look at the energy market, and you can kind of predict what is potentially going on in the future in the market. And also, you have to know that there's a lot of money, obviously, now that has been pulled out from the market that would love to see a violent rebound. When things do start looking a bit more positive, you should see good moves back for certain stocks. But again, it's going to be difficult to know exactly which ones those are going to be. I continue to be long Tesla and accumulating more shares at this type of price, even though I'm completely out of money again. But the Fed meeting on Wednesday this week. I think
Yeah.
that's the FOMC meeting.
So we got
right?
the FOMC.
So,
I mean,
we'll
we're
have-
looking out for 75 basis points. I think the real shock to the markets if they do 1%. But, you know, I think the Fed just go, why not? Like, because the thing is, if they do 50 now, they're going to do 50 next time. Why not just do the whole 1% in one go and then see where that takes us, you know? But I think if we do 1%,
shock
we're going
the
to
market down.
Yeah, we're going to have a massive shock lower. But I guess we'll see what happens. I mean, if you look at it, the S&P is still
it just depends on if you're...
The S&P still at just 3763. So, I mean, bear in mind the COVID low was like 2100. So we're still up like 40% from the COVID low. So, yeah, I mean, we're in the range.
Anyway, so it's been great talking to you, Rajan, again on this episode. Hopefully come back.
Let's hope for rosier pastures next week.
And
that's why I'm just hoping for some type of stabilization. It would just be nice, you know, smaller range just for a bit, just to settle the old thing, you know. Give me a chance to get out something, you know. But yeah, please like and subscribe if you like what you heard. And yeah, we'll catch you on the next one.